Good evening. I'm Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening of Thursday. And we're at the 19th of December, 2024, and the time, I'm looking myself here, 6:20 p.m. Central Time. So where are we in all these markets? Well, it's interesting. We're selling off again in the stock market. I'll talk about that in the financial update more than I will here tonight. In the metal markets, here's your culprit. It's still doing the market in. You're up another 40 points to 108.15 on a close in the dollar index. We have at Linn a system called price counts. Now, price counts don't tell you that a market's going to go here or there, but if the market's accelerating, it gives you a zone the market might go to. And that's the important part of it. They're target numbers if the market continues. I'm telling you, we had a 108 target. If you'll remember, if you were listening to me, back in the summertime, I said, it's crazy. We have a big number up there. I don't know if it's real or not. And here you are. Well, I'll tell you, we got a number that's just shy of the 110 number now for the next lug. So we will see if the market can make that. Obviously, the 108 originally was in the December contract, and then it rolled over into this. But it's amazing what it has done. And again, it doesn't call the markets. It's a zone where a market might go. Then you have to take a look at what's going on in interest rates. So let's take a look at the headlines that are coming in tomorrow and understand what's going on. Tomorrow we get a big important number called the Monthly Personal Income Spending PCE Price Index Report for November. They're looking for this to be up 0.4 on a month-to-month term, and spending is seen up 0.5. A hot number, which are these numbers or higher, well, that could cause more selling pressure in the stock market as it keeps the Fed with a tight policy, maybe even not cuts. While a lower number, one where all of a sudden the bottom's being pulled out of the market. These numbers theoretically go down to 0.2 or maybe 4 or 0.3. All of a sudden the market goes, wait a minute here, we are seeing some weakness. That could be a little friendly. The U.S. budget is going to be debated on and voted on, I believe, tonight. It's 6 here, 7 in New York. There was supposed to be a meeting at 5. How far it's getting, I don't know. If you listen to the Republicans, they said they have a deal. Well, that's the Republicans. It's still got to get to the House. It's got to be voted on. And even if it passes the House, what makes you think it's going to pass the Senate? The sad part is I can't talk about it because I don't know anything more than it's supposed to be an extension for 90 days, and there's the possibility that they're either going to raise the debt limit and or eliminate it completely. I know no more of the facts on that, but it is an important set. Now, there's one other elephant in the room for tomorrow. You know what tomorrow is? It's a Friday. What if I tell you it's Triple Witching Day? So you have, by some counts, $6.6 trillion worth of options going to expire tomorrow. And by notional values, I'm hearing just shy of $8 billion. These are monster numbers. Are we going to be up or down in these markets? That's going to be the big thing because they're on a lot of the stock products. The futures markets will go off. Options on futures go. ETFs, the options on those, a lot of expiration tomorrow. Expect a wild morning. And generally after that, a lot of these options, they get exercised or they let them die, and that's the end of it. We'll see what happens. When we look at gold for the first time, and this is important, let's come back. This was the close of business last week, all right, December 13th. Now we come into the market, and right now, if we were to close, and obviously we're not, this is the first move under that all-important number. So the pattern is now bearish. Will the market hold that support? It has in the past. So we'll see. But remember what this market's fighting. It's fighting a dollar that's on a run to the upside and interest rates that are higher for longer and higher. Two elements to them. The 10-year note tonight closed at 4.57. You haven't been there. I think May was the last time or so. So it's an important number. What's it doing to gold? It's taking the gold market down right through here. You can see you've got a pattern of a higher high and a lower low. These are streaking gold markets right now. You went from here all the way up. Remember, that's not a little bitty move. It's $150 an ounce. And then all the way down. And if you look here at 2,600 and you were just 27.61, about $160 on the downside. Almost straight patterns. If you think they're easy to catch, I'm sure for some of you it is. It's not for the average person out there. But now the question is, what next? I thought you'd do a better job of trying to hold the 100-day average and the Bollinger Band. It's doing the Bollinger Band job. The 100-day didn't do very much good, though. The market yesterday plunged there, plunged again today. It tried to get up and over it, couldn't do that, and it sank back at the end of the day. If you keep going down, the 200-day, let me come back to that. The 200-day comes in line at the 25.31 zone. When we take a look at the market, it's oversold. So momentum is oversold. You're at the Bollinger Band. You're in the zone, and that's all I can tell you, that I believe the pros are covering short positions. I do not see a reason to go long, but I see plenty of reasons to be covering shorts. Covering shorts is not going long. When I look at the gold-silver ratio, well, you can see you're back up here, and this is another reason. Each time we've come here recently, and I can even go back here, you haven't stayed up very long there before you fell back. And if the ratio changed, it meant silver got a little stronger, probably had to do with some of the pressures coming off the market. Silver market is still in a free fall. And that's the only way I know how to describe it to you. The market is trying to stay within the Bollinger Bands. It got out of it today. You can imagine there's a lot of stop-loss selling, a lot of people just bailing on the market, disgusted with it. Their Christmas is ruined. They thought they'd get these markets going. As you saw, Bitcoin was hitting new highs. Gold didn't participate with that, nor did silver. In the copper market, down. Now, I have been bearish, as you know, on the metal markets because I mentioned it over and over. I think that especially the silver market, the copper market, they're very dependent on was Chinese business going to pick up. It did not. Pick up means that the government come out and make a statement saying, here's actually what we're doing, and give the market confidence, not the old, hey, look behind the magic curtain. Yes, we're going to make everything fine, and away you go. Well, copper's the canary in the mine, and you are back down in here to the 408 level. In the platinum, you failed again at the 18-day average and fell back through here. All these markets, excuse me, in the metals are in oversold territory, not embedded, and knocking on the door of Bollinger Bands. So you can get a short covering rally for no reason. I'm going to repeat, that's not the reason to go long. That's all that I can say with it. And here's one of the culprits, of course. The dollar just keeps getting stronger. These are new highs on the move. You will hear people talking parity with the euro. I'm hearing it already in the trade. You can see that the market is trying to stay up and over. Now, did we get a breakout? This is important. If you look at the close yesterday, you were over the Bollinger Band. Look where you closed, near the highs. That's very important. Then we got to today, and today you closed up literally at the highs. So until this market's back under this level of 105, I think traders will look at this and say, we have a base now in the market. That's what this is. You can pull back in. The buy zone will be something probably near the 18-day average if it gets back there. And until the market clears that low, the game has changed. So the market's broken out of this action. Doesn't mean it won't pull back in the Bollinger Band. It's not what I'm saying. But I'm saying it's a different chart pattern now. So you put that together. You try to come up with your game plan. And this is what my job is. My job is in the mornings to do a video with you, cover all these markets. In the video, I bring you daily, weekly charts. I mix up the things and show you why I think you do this, that, or nothing. And I can promise you this is a do-nothing time in the market. It won't stay like that for very long. It also works, my videos on, will give you QT Mobile so that you can see how this works, special access to my reports, my twice daily written updates. It all comes in this. You just go to iraepstein.com research. All the information you need is right there. I'm Ira. You have yourself a great trading day, and I'll pick up with you all tomorrow. Take care.